Did you know that 35 to 50% of all of our hard-earned money goes to the government in the form of taxes? Gross. It's tax season, and we're all looking for ways to reduce our tax liability. So you're going to want to listen up to today's episode because we're diving into Amanda Han and Matthew Macfarland's book on tax strategies for the savvy real estate investor. They're going to teach us all about how to keep more money in our pockets and away from the government. Welcome to the Mastering Real Estate Podcast. This podcast is for real estate investors and professionals looking to take their real estate game to the next level. Each week, I review the industry's leading real estate books and break down the main lessons that you can apply to your life and business. Then, every other week, I review my own personal lessons learned from flipping over 100 houses and being a full-time real estate investor since 2018. Stay tuned each week so that we can all become masters of real estate together. Welcome back to the Mastering Real Estate Podcast. This is episode 17, and it's tax season. So today we are reviewing Amanda Han and Matthew Macfarland's The Book on Tax Strategies for the Savvy Real Estate Investor. Times are tough. And the last thing we all need is to pay a giant tax bill right now. So let's learn from some tax experts how we can use real estate investing to minimize our taxes. I'm your host, Maura. I've been a full-time real estate investor since 2018, managed over 100 flips, founded and grew a real estate investment firm, and I live and work in the real estate industry every day. We have two show formats on this podcast. The first show format is the Real Estate Book Review Show, like today's show, where I analyze the industry's leading real estate books, pick out the key points, and help you apply them to your life and business. Then, every other week, I'll share some of my most important lessons learned from flipping over 100 houses and being a full-time real estate investor. Also, we have an awesome YouTube channel where you can watch the video version of our podcast. Search for the Mastering Real Estate Podcast or Duratus Properties and you'll find us on YouTube. Subscribe to our channel so that you never miss an episode or any of our other content. So why should you listen to this podcast? There's a lot of BS out there when it comes to real estate, but there's timeless wisdom in books like the one we're covering today. I cover a broad array of topics and help you become a well-rounded real estate professional. Finally, I help you take action. I boil down the key lessons and takeaways from each book into action steps that you can apply to your life and business. This week, we are reviewing Amanda Han and Matthew Macfarland's The Book on Tax Strategies for the Savvy Real Estate Investor. This book covers powerful techniques that anyone can use to deduct more, invest smarter, and pay far less to the IRS, which I know that we all want to do, especially at this time of year. Before we jump into the book, let's learn a little bit about the authors, the husband and wife dream team, Amanda Han and Matthew Macfarland. Amanda Han is a CPA and seasoned real estate investor who earned her accounting degree from the University of Las Vegas and boasts over 2 decades of tax planning experience. As the co-founder of Keystone CPA, she specializes in crafting tax saving strategies for real estate investors across the nation. Amanda's expertise has earned her recognition in publications like Money Magazine and CNBC, and her best-selling book, Tax Strategies for the Savvy Real Estate Investor, has sold over 50,000 copies. Not revolutionizing wealth-building techniques, Amanda enjoys painting, beach biking, and exploring hidden culinary delights. She currently resides in Fullerton, California, with her husband. Matthew Macfarland is a CPA with over 20 years of experience, and he specializes in tax strategies for real estate investors. He holds degrees from UCLA and USC and is the co-author of today's book. Beyond his professional expertise, Matthew founded the Animals for Armed Forces Foundation and is an avid baseball enthusiast. He also resides in Fullerton, California with his wife, Amanda. Here is a summary of the book. The Book on Tax Strategies for the Savvy Real Estate Investor is a comprehensive guide written by experts in real estate taxation. It offers valuable insights and strategies for real estate investors to optimize their tax planning and maximize their profitability, covering a range of topics such as entity structuring, expense maximization, and income offset strategies. The book equips readers with practical techniques to reduce tax burdens and increase wealth accumulation. With easy-to-understand explanations and actionable advice, this book serves as an essential resource for both novice and experienced real estate investors looking to navigate the complexities of taxation effectively. Its ultimate aim is to help investors increase profitability and build long-term wealth. This book covers a lot of ground, but here are some of the key concepts that I took away from reading it. Number 1 is the importance of entity structuring. This part talks about the importance of selecting the right legal entity for real estate investments in order to maximize your tax benefits and protect your assets. Number 2, the authors talk about expense maximization and strategies for maximizing deductions and expense write-offs related to real estate investments, including depreciation, repairs, maintenance, and operating expenses. Number 3, the authors talk about income offset strategies. They discuss techniques for offsetting rental income with expenses, losses, and other deductions to reduce your taxable income and therefore your tax burden. Number 4, retirement investing. This section was really interesting. The authors explored tax advantage retirement accounts such as the self-directed IRA and solo 401ks, which I really didn't know that much about. And they talk about how to use them for real estate and leveraging tax benefits for retirement savings. That section was probably my favorite in the book. Number 5, the authors discussed long-term investment strategies and provided guidance on long-term hold strategies for residential and multifamily real estate investments with a focus on building wealth over time while minimizing tax implications. Number 6, they talked about tax planning for high net worth individuals with specialized tax strategies tailored for high net worth individuals investing in real estate, including estate planning, asset protection, and wealth preservation. And number 7, and finally, they talked about legal compliance and risk management and tips to ensure compliance with tax laws and regulations and how to protect yourself and reduce the likelihood that you get audited while effectively managing the risks associated with real estate investment. So that's a quick breakdown of some of the key concepts covered in this book. Okay, if I really had to boil it down, here are the 4 most important points that I'm going to take away from reading this book. Number 1 is you need to know what you can deduct so that you can proactively plan and deduct your expenses. The authors say one of the easiest ways for us as investors to minimize our tax burden is to simply capture and claim all the legitimate expenses we are entitled to. And this requires a little bit of study and research. Reading this book is more than enough, just so that you are aware of all the tax deductions that you're entitled to, and that way that you can proactively plan ahead a little bit and make sure that you're properly planning and documenting all of your expenses in order to ultimately maximize your tax write-offs. This is everything from tracking your mileage, your travel expenses, planning your vacations a certain way so that you can write off the most things possible, all the way up to the nuances of owning rental properties. It just takes a little bit of knowledge of knowing what tax deductions we're entitled to so that you can plan ahead and ultimately document and maximize your write-offs. My second big takeaway is that depreciation is a powerful tool available to almost every business owner to reduce your taxes every year. Depreciation is one of the most powerful tax tools that we can use as real estate investors. It's available to almost every one of us, and it equates to a tax deduction every single year. And there are even some advanced strategies that they talk about with cost segregation where you can use depreciation to deduct even more from your taxes if you need to. This is a huge one. All real estate investors need to know about the power of depreciation and make sure that you are taking full advantage of that every year. My third big takeaway is this one. The best way to inherit property is after death from an irrevocable trust with retained powers. So whether you are the one benefiting from inherited property or you're wanting to do your estate planning and pass on your assets to your next of kin, they recommend that what you do is you place your asset inside of an irrevocable trust with retained powers and wait till after you die to pass on your property to those who are going to inherit it. And the reason is because that way the beneficiary gets the stepped up basis to fair market value upon your passing, which significantly reduces the amount of taxes they have to pay if and when they sell the property. I just thought that was a very interesting point because a lot of times you'll see people as they get older, as they get closer to death, sometimes they'll try to offset some of their assets or try to transfer their assets to their family members before they die. And this actually can significantly increase the potential tax burden that the family members have to pay. So really it's better to do it this way where you wait till after you die, but you simply put your assets inside of an irrevocable trust where you clearly identify who is getting what asset and then they inherit the asset once you die. So I thought that was a very good point. The fourth and final point, I learned a lot about the solo 401k, which I did not know that much about. And so the solo 401k is also sometimes known as the solo K, is a more flexible and powerful type of self-directed retirement account. You can use a solo K to purchase rental property you can use a solo K to purchase rental property with leverage and without worrying about the UDFI tax, which is a 39.6% tax. So this makes the solo K a lot more advantageous than some of the other self-directed retirement accounts because it's not subject to this UDFI tax. When selling a property inside of a solo K, you don't have to worry about any taxes on gains as long as the money stays within that retirement account. So if you sell a property and the profits just go back into the retirement account, they don't get taxed, which is pretty awesome. You can also borrow money from a solo K, and there's a much higher contribution limit than the other IRA accounts. So again, I didn't know very much about the solo K. Now I know a lot more about it, and it seems like a very advantageous way to both save for retirement and invest in real estate. There are a lot of great quotes in this book, but here are 3 that I really like. The first one is, it may sound shocking to hear that the average American pays more money in taxes than they spend on food, clothing, and shelter combined. But unfortunately, that is the reality. They talk about how as Americans, we pay anywhere between 35 and 50% of our income in taxes. And this is not just your income tax that you pay on April 15th. This is if you calculate all the taxes that we have to pay. Sales tax, property tax, income tax, all the taxes that we pay all throughout the year, as well as during tax season, add up to 35 to 50% of your income, which is really crazy if you think about it, that most of us are paying 50% of everything we make to the government. For me, I have a strong reaction to that. So that motivates me to want to learn as much about the tax code as I can so that I am paying on the lower end of that 35 to 50%. The next quote that I thought was notable is this one. The ugly truth is that because most financial planners are compensated based on investments made in the stock market, there's not been much incentive to inform or advise clients on how to use retirement funds for real estate and other self-directed alternative assets. This was a very interesting quote and is something I've been hearing more and more about lately, where if you use a financial planner or stockbroker or something, they are financially incentivized to direct you towards certain types of accounts and not towards others. And that's probably why I didn't know very much about the solo K, because a lot of financial planners out there are not incentivized to direct you towards them or talk about it. This just underscores the importance of taking your financial future into your own hands, educating yourself, because you can't always trust these so-called financial experts to give you the very best advice or lay out all your options. The third quote that I thought was important is this one. Retirement contributing is one of the most powerful tools in the tax world because it allows you to put money toward your retirement rather than paying it to the IRS. With the added benefit of tax-deferred growth, retirement strategies often provide significant short-term and long-term tax benefits. So this is in a similar vein, but retirement contributing, this is a big way to invest and get out of paying taxes. So this book opened my eyes to this and made me want to learn more and read more about the different ways to use different retirement accounts for investing, both in real estate and other types of assets. So I think that this was a big takeaway for me, and it might be for you also. Here's what I liked about the book. The authors clearly tried to make this book not dry by including lots of stories about each concept they discuss. Obviously, it's a tax book, so you go into it knowing that it might not be the most scintillating read, but I really felt the authors tried their best to make the subject come to life and not be so dry and boring, and they did a decent job. And I really thought that they clearly explained all the concepts in a way that was relatively easy to understand, which is very much appreciated because sometimes opening a book about tax strategies can feel a little intimidating. All that being said, here are 2 things that I did not love or 2 things that I would improve about the book. So the first thing is that I would have loved this book to have a few more details about selecting a good CPA as a real estate investor. I'm sure several of you in the audience can relate to this, but finding a good CPA who specializes in real estate is actually pretty darn difficult. Our company has been through several CPAs, and of course, they all tell you at the beginning that they know the ins and outs of real estate and the tax law, but turns out the vast majority of them do not. And since these authors actually are CPAs and specialists in real estate, I would have loved just a little bit more advice about how to find the right type of CPA as a real estate investor. I think that could have really helped a lot of people. They do touch on this, it's just very light on the details and pretty general advice, in my opinion. And the second thing is sometimes I think they told a few too many stories, a few too many anecdotes to try to make the book come alive. I thought this made it just a lot longer than it needed to be. I appreciated that they wanted to make it not so dry. I do think the stories were a little on the whole. There was a lot. So I don't know, maybe half as many good. In my opinion, here are 2 lessons that we can all take away from this book and apply to our businesses. Learn, plan, and track your tax deduction. Everyone can read this book and make a quick list of all the tax deductions that apply to you and your businesses. Then, once you have your list of things that you want to track, you can go ahead and plan accordingly and also document accordingly so that you can work with your tax professional and increase the amount of money that you take home every year. I know for me, there's things like my mileage, my travel expenses, my home office that I know are tax deductible, and that was reaffirmed when I read this book, but I just haven't done a good job of documenting these things every year and making sure that I write them off with my tax professional. So I'm going to make sure that I do that this year, and you can do it too so that we can all take more money home at the end of the year. Number 2 is to maximize depreciation. If you are a homeowner or investor, this applies to you. Almost all of us can be taking advantage of deducting depreciation from our taxes, so work with your tax professional and make sure that you are doing this. Check your tax return. Make sure that the line item for depreciation is in there because that usually equates to thousands of dollars in tax savings every single year. And if you have a year where you have a particularly high tax burden, depreciation is something to further explore. You could potentially explore doing a cost segregation study and utilizing accelerated depreciation. Just keep that in the back of your mind. Talk to your tax professional because that could potentially really help you out if you're looking at a big tax bill. Okay, who should read this book? The short answer is all real estate investors and tax professionals should read this book. Taxes may not be the most fun subject in the world, but they are a critical component of real estate investing. The more you know, the more money you will keep in your pocket, and the sooner you learn about taxes, the sooner you'll start saving yourself and your business a lot of money. So if you're serious about being a real estate investor, you need to read this book and probably a few more after this to make sure that you have a good working understanding of taxes and how they apply to real estate. And then if you're a tax professional, you should definitely read this book and probably a few others, and not be like the many CPAs and tax professionals out there who claim to know about real estate and real estate tax deductions, but actually have no clue. I've personally come across many of them. I know many other people also have had that similar experience. So if you're a tax professional, this is your job, your profession. You need to know the ins and outs of real estate taxes, and this book is probably a decent starting point. Overall, I rated this book a 6 out of 10. I thought the book was decent overall. I wasn't blown away by it, but I did learn a few small useful things that I didn't know before. As a somewhat experienced investor, I did know most of the things presented in this book, but a new investor might find it even more enlightening. I do think that finding the right CPA is something that most investors struggle with, so including more details and guidance about this would have been very helpful. I did think that the book went a little bit overboard with its stories and anecdotes, and although I appreciate that the authors were probably trying to make the subject matter come to life and not be so dry, I think it made the book a lot longer than it needed to be. It could have been even shorter and more to the point, which for those of us who are busy professionals, which is most of us, I think that would have been even more appreciated than all the stories. So overall, I gave it a 6 out of 10. It's good. It's definitely worth the read if you're a real estate investor. It's not gonna knock your socks off. Now let's take a quick minute to thank our show sponsor, Duratus Academy. This book scratches the surface when it comes to tax planning as a real estate professional. Not to toot my own horn too much, but I think that my masterclass does an even better job breaking down how to succeed when it comes to tax planning for your real estate investment business. I go into detail about how to find, screen, and select your CPA, which is a lot harder than you might think. I also review how to use the most common tax strategies for your business, and I help you incorporate those strategies into your overall business plan. Tax planning and finance are just one component of my masterclass about how to get started investing in real estate the right way. So go check it out at duratusacademy.com if you would like more help taking your investing business to the next level. This concludes today's episode. Thanks so much for listening. Come back next week to learn about my biggest real estate deal to date. Next week, I tell the story of buying 42 houses in one day. You won't want to miss this one. Thank you so much for listening. Make sure that you are subscribed to the podcast and leave us a rating and review. We are a new and growing podcast, so every rating, review, and share helps immensely. Also, make sure that you're following us on YouTube and social media. You'll get a lot more behind the scenes and content there daily. See you in the next one.